Okay, that should be good to go. Hope everyone's doing well. Had a nice weekend. Glued to our screens, if you're anything like me. And yeah, let's dive right into it. Hope everyone's doing well. We've crossed the 20,000 subscriber threshold, which is really cool. Thank you very much for your support. If this is your first time watching, where have you been? But also, like the video, subscribe to the channel, etc., etc. And as the people stream in, of course, thank you to Blockfolio, the sponsors of Technical Roundup. The good thing about Blockfolio on days like these is that you can actually hide your portfolio balance and performance, which is really good, because if you don't see the losses, it's like they never happened. We all know that universal rule, right? So thank you, Blockfolio. Spot trading, asset swaps, sending crypto to your family. Be sure to check them out. And again, not just an arbitrary sponsorship, that is the mobile spot trading app of choice for me, for my family members. Although I do hope they're not checking today. Okay, I want to start with a general note. So the market's pulled back, whatever, 30-odd% from high to low. So I want to make a point of two things. The first is that, generally speaking, this is, in terms of percentage pullbacks, where you'll be typically, in normal circumstances, approaching like an emotional climax in the market, or kind of peak uncertainty or fear, whatever, especially if you're new. So this is really valuable for you to journal your emotions, your trading, how you're feeling, changes in your habits, behaviors, etc., just to be aware of what you feel like when this type of volatility kicks in. And it will be useful for future reference, even if it's not immediately obvious why recording your emotions might be useful at this time. Trust me, it will be. So just keeping a bit of a journal, some sort of record, even the Notes app on your phone or whatever, worthwhile endeavor, in my view. Second of all, I hope the magnitude of this pullback casts some much-needed skepticism over some of the things that we like to believe when the market looks really strong. Oh, the 30% pullbacks was in what took place in a retail market. Now that it's the institutions here, the pullbacks will be shallow. Oh, on-chain support, so therefore it can't go below 55k. Oh, miners are holding, and therefore this is bullish. Oh, outflows from Coinbase, therefore institution. I mean, just you have to realize there are no rules in the jungle type of thing, right? And whenever someone's trying to market to you or present you with these so-called hard facts and certainties about what can and can't happen, this is still a relatively new market. I know it's a 1 trillion cap, or was, etc., but still, you know, very reflexive market, relatively nascent market. So treat any so-called objective statements about price or some of the fake empiricism associated with on-chain analytics, all of those sorts of tools of reassurance, which becomes tools of complacency. Be wary of them always. They are not your friends, and those same tools and their biggest advocates will go silent when, you know, when you'd want them to come out and give you their views the most. So, you know, if you have a brain, use it, is what I suppose I'm trying to say in a very long-winded manner. Okay, the other thing I'll say is, you know, I tried to give some context or color in terms of what I'm up to when it comes to these streams on the Monday session. I've still been stuck in USDC for whatever, since the 16th of April, I think, 16th, 17th of April, thereabouts. I can find the exact chain of tweets which followed my logic, and not much has changed since then. I'll post it in the chat, actually, which is here. I'll bring that up very quickly. So you remember this is on the 16th of April, right? To take us back. So that's up here, 16th of April, this bit of price action. And basically the argument for moving into a defensive position was that we had this big Coinbase direct listing, positive catalyst, IPO, whatever, and the market didn't like it. You had a very leveraged breakout, went nowhere and fell back below. And that's bearish whether you like it or not. And so around here, this sort of price action was the catalyst for me to move into stable coins, play more defensively, etc., etc. And as we can see, the level that was derived from that never got invalidated either. So I haven't had an accompanying trigger to get back in to the market. So that's good. Like, I'm pleased with that, and my positioning at the moment hasn't changed. Although, as we'll discuss shortly, with where the market is right now, I'm certainly going to be looking in the direction of at least adding back some of that exposure. Not least because unless the daily time frame image changes and starts to look really bad, I don't have a sell at these levels, and I'll explain why in a moment. And more important than, okay, well, look at this tweet chain, you know, I got out near the top. Like, the logic, you know, the arguments and the reasoning made within that chain, that's what's more important, more accessible, etc., etc., far more than the specific outcome, right? Another plug or shill, because, you know, Twitter is really good at autofellatio. I'm not so good at that, but, you know, Don and I do some pretty good work for Technical Roundup, also sponsored by Blockfolio, the newsletter. And that also wrote about playing defensively from like 58k or 57k or thereabouts. I'm just typing on my other monitor to bring up that newsletter where we made the same argument. Hold on. Where are you? Yeah, okay. So here's April number 3, right? The third newsletter of April. So when would that have been? 1, 2, yeah, so that was on the 20th, I believe. Yeah, the 20th of April, Bitcoin's failed breakout. We can take a look at the chart here, right? And this is what we're dealing with. Post breakout, the market's at 56. And the argument made, the market, you know, now we need signs of strength, a reclaim of resistance, 61.2, or a test of support, 46.5, are good ideas to make bets. Outside those boundaries, we're playing defensively. The churn in the mid 50,000s is far less clear. Mid-range bets are rarely compelling. So again, if you want to, I'm not trying to sell you anything, right? It's a free newsletter, comes out once a week. There's no follow-up products, no upsells, nothing like that. Just, you know, go sign up, and Technical Roundup tends to trade better than we do. So there's always some benefit to that. TRLetter.com, we get things right from time to time. We get things wrong as well, but some of the logic is definitely accessible, right? So where does that leave us right now? Well, let's look. So on the monthly time frame, it's still not of much use to us. I don't recommend turning off log and looking at it like this because it starts to look pretty scary. So what we're going to do is pretend it doesn't exist and that it's not relevant to us, which is a pretty good head in the sand type of strategy, right? So that's cool. Let's just move on to the weekly. Now, the weekly has basically moved, you know, in all these months, or in the couple of months of price action in front of us. Prices basically moved from one side of the range to the other, right? If you recall the short Twitter clip video I made, the basic argument was that you've got the highest close as resistance, lowest close as support. Price failed to gain acceptance above the highest close, and therefore you're generally expecting price to move towards the other side of the range, right? And that's sort of where we've landed, right? If we use those as levels and take this consolidation and add this lowest close as support, that's kind of where the market's landed right now, okay? So I don't have a setup to sell this, not least because on a weekly closing basis, the market closed above the level, right? And so the earliest I can look to sell a weekly setup which appears to be respecting support is on the daily time frame. And even then, I would need to be pretty careful, especially if it's early in the week, because if I get too aggressive selling a weekly setup on the daily time frame, there's a chance I end up eating shit, selling the wick before the higher time frame buyers step in and buy this thing, right? So that's kind of the thing in the back of my mind at the moment. Now, if we look at the daily time frame, when price reached, so again, context first of all to where we are, weekly closed above support, so 45, important weekly level. I'll also add that it's the previous week's and at the moment yesterday's low is also very important, right? PDL, oops, previous week's low. That's kind of the first area where if signs of absorption show up, that sellers are trying to force a breakdown and not being successful, that will be the first clue towards reversal. Now, the other level I will add is pretty basic. This lowest close as our nearest weekly broken support turned resistance, which lands at around 49k. So if we look at the weekly closes, I mean, market structure, depending on how you look at it, most likely is broken on the weekly time frame, simply because if we're looking at the lowest closes when it comes to market structure, you've got this low here, right? And then presently, or at least on the closing basis here, you've got a lower low close relative to the last one. And on the basis of if you want to use the swing points as well, like the wicks, you know, higher low and then lower low here as well. So weekly market structure like isn't in a great spot, but I don't think that's not the only thing I look at, right? It doesn't change the fact that we've reached the move from one extreme of the range to the other extreme of the range, and that's kind of it. The other point of context, again, the mythical mid 30 to 40% pullback in the bull market. If we measure from high to low at the moment, that's 35%. So if this is going to look anything close to a standard or a sort of orthodox or classical bull market correction, just in terms of, I mean, probabilistically speaking, given the magnitude of the move that's already taken place, it's not, and with the context of weekly close at support, like all of the stuff we have in front of us, at least for me, it's not something I'm chasing to sell. You've got the magnitude of the pullback, price closing above weekly support for the time being, and currently not having much success breaking down below yesterday's low or previous week's low. But again, you know, I'm speaking from a position of being in USDC for a while, so I don't have to make urgent decisions as to what I need to do with this thing. Your predicament may be different. What I will say is that the same conclusion as in my short clip from some time ago is applicable, which is if the market wants for any reason to revisit this pre-breakout consolidation between 32 and 38, I think that's a brain dead buy, even if it doesn't give you an immediate reaction, whatever, purely in terms of structure and magnitude of the pullback and invalidation, because there's not much below here that you want to be a buyer of. It's a really good do or die type of spot if the market wants to go there. It's actually quite funny. I remember making a short clip where I talked about 58, 59 resistance and 45 support, and then I spent about 5 seconds talking about this level. Like if you get a dip in there, buy it. And then the whole video, the entire comments section, people were expressing their disappointment that I would even entertain the idea that the market could reach 32, 38, while the focus of the video was actually to discuss the range low at 45, which I thought was an important level. Now that we're at 45, of course, this apparently doesn't exist at a level, and 32, 38 is being taken for granted. It's just a bit of a I don't know. It's hard to justify, and you have to realize the way that emotional traders work, and a lot of what you see on Twitter works, is someone will have a level of support which they, with the market's up here, and they'll identify this as like a really good level of support they want to buy. And if you ask them when the market is right here, like, hey, if you could get a buy at this level, would you take it? They'd be like, oh mate, if that pulls back, I'm all in, etc., etc. Then we have to realize is because they are men gripped and manipulated by fear, as the market moves lower into their level, suddenly the appeal of this level starts to vanish, and then they'll start to pay attention to levels that are below market. So you end up in this really precarious situation where, because you're getting emotional as a result of the drop, you abandon your otherwise rational analysis at your pre-planned levels and you start looking lower, right? And the same works in the bull market, right? So you have a level of resistance or a profit-taking level, whatever you want to call it, that you say, if the market gets up here, I think that's a good hedge, sell, take profit, rotation, whatever. And then as the market starts, while price is here, that's easy to talk about. And then as the market starts to come into the level, suddenly this is no good. And you start looking and often imagining levels higher up. So you end up in this in my view, very unfavorable and unfair to yourself set of circumstances where you get more bearish as price goes down and you get more bullish as price goes up, even if it's reaching your predetermined areas. And that's just no way to live, and it's no way to trade either, in my opinion at least. So whatever, doesn't matter. Looking at the chart right now, as I've said previously, I still think if you get 32 to 38, it's a really good spot to take a bet. And the reason for that is, I mean, structurally, yes, it's our clear cluster before the breakout. That's really cool. But also, there's not much in terms of structure under 32, right? I mean, even losing 38 would suck, but below this whole structure consolidation, there's really not much to look at aside from prior all-time high levels. So you have like a ton of space between the level which should hold, right? The area which should hold, and then where the market might go if it fails. That's why do or die levels, if you correctly identify them, work so well, because they present you with the most asymmetry when it comes to trading these things. Anyway, in terms of my current views, unless the daily time frame starts to really look like a piece of shit, I can't sell at 45. I don't have any system or triggers or whatever on the daily time frame at the moment, which would allow me to be a bear at 45. The exception to the rule would very likely be a very impulsive high time frame close through last week's low or yesterday's low. Like if this area just gets completely blasted, then there's a good chance my bearish bias can flip, and I can look to target those levels lower. But as I said, even in that case, I have to be cognizant that it would be a data, in terms of data points, it would be a single daily breakdown in the context of a weekly level. So even if I were to turn bearish below 45, 43, whatever, I would need to do so with utmost caution, being fully cognizant that I risk selling a daily breakdown, which could end up being a weekly deviation, right? So because the weekly closed at support, I have to be very, very careful if I want to be bearish. And so the least or the minimum requirement for me to look towards any type of continuation to the downside is daily time frame weakness. And even in the presence of that daily time frame weakness, I'm still going to play any such positioning really defensively, simply because there's always a chance I sell the daily wick before, or the weekly wick before some sort of mean reversion to the upside. Does that make sense so far? Also, thanks to my good friends XO, Cos. Nice to see you boys. Hope everyone's doing well. So that's kind of the available evidence I have based on the weekly close and the daily time frame at the moment. Now, more casually, like if a friend who could afford to actually invest in crypto, like there's no urgent threat to their income or whatever, they said to me, look, the market's down a lot, should I be selling? My answer would probably be no, right? Like, again, unless there's some sort of threat to life, health, it's money they can't afford to lose, etc. I'm personally not comfortable being the person that tells someone to sell their Bitcoin when it's down like 35%. I just don't think that's historically at least, and even in this context, a particularly reasonable decision. And even if it goes to the next high time frame area, right? That's just like barely over a 10% haircut, and then that becomes the asymmetry is really towards the upside. Like you really want to be long or look to long crypto in this type of area, because if that doesn't hold, then we're all fucked. And those types of high conviction areas where price must do something out of necessity, they tend to be where I like to make bets anyway. So if you're like, I suppose the blunt version is if you're panicking now, in my opinion, like it's probably a bit too late to be panicking, in my opinion. But again, you feel free to criticize my perspective because I'm in USDC and I can choose what to do with my collateral, etc., etc. 5 a.m. says, if they ask you, should they buy right now? I would say they should buy some right now, for sure. I think you need to have a really good reason to tell people not to buy like 35% pullbacks in Bitcoin, right? So the presumption is if the market pulls, like normal bull market corrections, 30 to 40%. The market pulls back 35%, someone asks you, should I buy some Bitcoin? If your answer is no, then there needs to be a pretty strong basis to diverge from what we've seen in the past, right? I generally don't like talking about crypto investments, whatever, with friends, especially in 2021. It's been really weird with everyone wanting to become a day trader, etc., etc. But like, people who do ask about getting exposure to Bitcoin and wanting to buy, I very rarely tell them to blow their load in one go, right? I'll normally say, like, split it up into maybe 3 purchases or at least 2 purchases, anywhere from like 3 to 4 tranches, whatever spot amount they want to buy, and get the first bit out the way, and then add, if it goes higher and reclaim stuff, sure. If it nukes further, sure. But yes, to answer your questions, the normie low-hanging fruit questions, I wouldn't be telling people to panic sell here. It's probably too fucking late, at least probabilistically. And I think for people with a meaningful long-term view and who can afford to hold that meaningful mid to long-term view, a 35% pullback, you have to make a really good case for that not to be a good buy, at least in terms of 20, 30%, or whatever amount they want to get exposure to. And I don't have that good evidence to tell them, no, this time's different. It's actually going to go down 50%, 80%, whatever. So those are my answers to those questions. Now, in terms of the trading side of things, as I've mentioned, the weekly closed at or in a way that respected the range low, right? The daily time frame also respected that close, but understandably swept yesterday's low, previous day's low, and more commonly or more usefully to us, previous week's low as well. I don't have a setup to sell this. If anything, during the course of this week, my weekly bias, given those high time frame closes, is going to be towards the long side, or playing some sort of reversion back to 49, 48, or something of that nature, right? Now, what would a setup like that look like? I've got an amazing answer, and that answer is it depends, right? It depends. But realistically speaking, what I would like to see, first of all, on a daily time frame closing basis, the first ingredient would be a close above yesterday's low or previous week's low, whatever it may be. Because what that would suggest to me is the high time frame context is that weekly and daily support is holding. Then you have last week's low, a bunch of attempted, an effort to break lower and sell through and get a continuation trade going towards those lower levels, and then a failure to do so, right? And when one side of the market really tries to do something and it is not successful in that endeavor, that's especially at key inflection points. That's usually when you get some sort of reversion to the upside, as those trapped sellers have to cover or flip, get liquidated, forcibly close, whatever. And as we know, shorts which close, especially at market, become orders to buy. So if sellers really try something, they don't get their way, and they have to puke, that puke is the source of momentum to the upside, or at least reversion in this case. So what does that mean? I'd at least want a daily close above yesterday's low. That's a good sign. And then realistically, I can't really predict what the price action would or should look like. But generally speaking, you can see from what we have right now in terms of this weekly and daily structure, which I've got like 43.8, 42.5, doesn't even matter too much. That's not currently been acting as support. If I have price action which is suggestive of acceptance back above 45, I'll look for a short-term trade towards my first trouble area towards 50. Now again, what that exactly looks like, I have no idea. For example, if we take market structure, low, high, lower low, lower high, lower low, lower high, equal low. So a market structure break would necessitate, or require in this case, a higher high, for example, right? So that's your classic market structure reversal pattern. You've got lower low, lower high, lower low, and then if you get a higher high in that case, this tends to be a turning point, at least often is a turning point in market structure. And then in that case, you either hop onto some sort of continuation entry after the higher high, or you buy the pullback to the preceding lower high. So in that case, if we apply that logic of needing a low time frame shift in market structure at these high time frame levels, we could take this cluster, right, which also has this high here. You get some sort of higher high on intraday basis, then a pullback into this area. Your risk is defined for you, and then you've got to move into the first trouble area at 49. I really don't like doing terribly specific squiggly lines because I don't think it makes a ton of sense. Like, if you've been trading price action for years and I tell you I need this to act as support and not act as resistance, and you don't know like what that means, then I think you're doing something wrong, right? At the very least, I'm not a huge fan of templates for what exactly price has to do for these levels to be bid and for me to buy them from support into resistance. That's why I didn't understand this at first. Like when I was really in sort of 2018 watching Trader SZ videos, right, which he's got thousands in his library. I recommend that to anyone to this day. He would talk about like, you know, price comes into this level and it shows me bullish price action or bearish price action. I'm always like, what the fuck is this guy talking about? Like, is he lying to me? Is there some sort of trick where he doesn't want to define what bullish markets, like bullish or bearish price action is? Like, why is he avoiding telling me what that is? And actually, it was just wisdom that I didn't recognize at the time. There is no one single template for what it means for price action to be bullish and or bearish. Like, you kind of know it when you see it. You can certainly set criteria in terms of candle closes above levels, kind of market structure setups we talked about on intraday timeframes. Maybe you get like a failed bearish setup, right? Like the market really tries to break down and then springs above the level. There are a million different ways which can act all as valid triggers when it comes to a real shift in behavior at these levels. But it's just not in my interest. And I don't think it's realistic, especially in a weekly live stream, to try to plot out every single possible scenario for what it would look like to get bullish triggers at these higher time frame levels. I've done one, which I think is reasonably clear. You get a break in market structure, and then it's a question of how deep a pullback do you get and where do you do business. I think that's good, but I have no intention of insulting your intelligence by sitting here and coming up with a million squiggly lines as to how to get long this market. In the appropriate circumstances. It just doesn't make any sense to me. So that's the sort of the best I can do. And I hope that's not too terrible. But let me know if it isn't. Or if it is, rather. Let's see. I really think that's all I've got for Bitcoin. So just to summarize... And yeah, like the video if that was helpful, and I appreciate you guys hanging out with me on this fine Monday day. So yeah, just to summarize, the levels that I'm watching on the weekly time frame, or just generally, there are I mean, there's a daily structure which I probably should add as well, which is this lowest close here, but it's all the same thing. So 3 structures which have my attention certainly for the first half of the week. The first is previous week's low at 43.8. Ideally, to get at least some sort of relief bounce, there should be an effort to break it, which fails. And that effort by bears failing would be bullish, right? So that's the first requirement. Accordingly, if that effort fails and you get like a meaningful, full-bodied type of impulsive candle close through previous week's low, which doesn't immediately kind of reclaim or look strong, then it's probably fucked and I wouldn't get any type of trigger, setup, whatever, okay? The first requirement, effort to break lower in a key area, which for me is previous week's low, which isn't successful. After that, my focus shifts to actual structure or levels at 45k, right? Again, I've got 44.8, 45.2, doesn't really matter. It literally rounds off to 45k. And yes, as Dana Wolf says, a bearish setup that fails is usually bullish. Absolutely. So in that case, assuming the daily time frame doesn't roll over, I cast my attention back to the structures where I want to do business, which is at 45k. And it's at that point where I will then be observing intraday timeframes, 4-hour, 2-hour, hourly, whatever, and looking for an impulsive move, which ideally breaks market structure, and then for these levels to act as support. And my target for any such trade would be, again, this is like my short-term strategy, so I'm not trying to catch the bottom, swing, low leverage, any type of bullshitty thing. I'm simply looking for the first trouble area at 49k. Someone asked earlier what what are the conditions under which I feel comfortable getting back into spot? That's a really good question. I don't have like a hugely clear system to it, but realistically, a couple of things tend to be attractive. The first is a deeply sort of discounted market, right? Like if I think like really big pullbacks, or the market just reaches a level where you can't do anything but long. So price coming into really, really key levels, not just like the first level of support, but I mean like really the market looks like a piece of shit. And there's almost no other support, and this level has to hold for us to be in a bull market, and the magnitude of the pullback from high to low is pretty big. Then simply from a risk reward point of view, that's when allocations to spot are comfortable. Personally, at least sort of gut instinct, 45, that area we've been paying attention to on the weekly time frame, isn't one of those levels instinctively, but it could very well be. And also, just on a side note, what you can do in those cases where you want to have your spot exposure back, but you don't want to do it by yeeting crypto collateral, maybe there are tax implications to that as well, you just 1 times long whatever you have in USDT, USDC, whatever. So let's say you're tethered up, you've got a trading account of 10K, right? And you don't want to swap your crypto back into collateral, but you think it could be the bottom, or you want some sort of exposure, even if you don't want to swap everything back, you just get a 1 times long position on futures to express that view. I think that's a middle ground which could work for some people. I'm not a huge fan of that generally. I'd rather just stick in dollar collateral until proven otherwise, rather than do this type of thing, but it's definitely an option. So when it comes to when to allocate spot, giga discount, which means, massive pullbacks, right? What does that actually mean? Big pullbacks in terms of magnitude, right? The percentage move, and then also kind of do or die. And by that I mean, let me just lower the sensitivity of my mouse a little bit. Kind of structurally significant levels, right? So that's the first one. Giga discount, big pullbacks, do or die, structurally significant levels. And I think 45, it isn't the spot for it, isn't like the best one. But as I said, I would be comfortable, if speaking to my own friends, not financial advice, whatever, to allocate some portion of whatever spot they had on the sidelines, given the 35% pullback. I would sleep well at night telling my good friends that was my opinion. So the second criterion for that is actually a high time frame market structure shift, right? So holding spot is really easy when price is making higher highs and higher lows. You're in an uptrend, especially because in crypto, it very rarely looks like this, but actually tends to look like that. And, holding spot in those types of scenarios is no tall order. And you certainly feel comfortable doing it, even if you get these sorts of dips, which tend to be a lot less aggressive than whatever 30% we're seeing now. So when high time frame market structure, I should say high time frame market structure bullish, right? Either bull or shifts to bullish. That probably, how do you spell shifts? There you go. Shifts bull, right? So either you're already in that high time frame market structure and you're looking to get in either on the break, the higher high portion, or the higher low portion. Again, with spot and spot collateral, doesn't really exactly matter where your entry is. There's no requirement to be as precise, in my opinion, especially if you're expecting like multiples to the upside. Or so that's if it's normally bullish, or if it shifts to bullish market structure. By that I mean, let's say you've got a downtrend and it's the same old thing. You finally get a lower low into a higher high, and that might be, okay, hey, something is afoot, something seems to be changing. This is a decent spot to yeet my collateral from USDC, USDT, USD, whatever, back into crypto. And quite honestly, this is pretty simple because I will usually get those signals derived from the daily time frame. I've been obsessively staring at and trading crypto for like, I don't know, 4 years or something. I don't remember. Time is a construct. And there's no, in my opinion, there's no better indicator or tool than daily market structure. I just really don't think there is. At least for me and for my trading, I should make that clear. But daily market structure, insanely underrated, very effective. So, you know, there are no complex rules surrounding this. When it comes to making assessments, if I want to allocate a spot and hold it, daily market structure is king in that regard. Either it's already bullish and I'm tagging on the higher high portion or the higher low portion, fine with both of those, or if it's bearish and then shows me evidence of shifting bullish, which would be a higher high after a lower low, I'm comfortable in that case as well, usually derived from the daily time frame. So to recap, when do you yeet spot, or what's my framework for yeeting spot, right? Giga discount, right? Which either means on a percentage basis or structurally it's do or zero, right? And then the second one is market structure on the daily time frame with the considerations of it's already bullish, in which case I'm fine basically breakout buying the higher high, or ideally the dip into the higher low, or if it's a shift in market structure, it's very much the case of a higher high post lower low. Is that helpful at all? Does that make any sense whatsoever? And if it did, like the video, blah, blah, blah. But that's at least my tentative framework for it. Does CBS actually have beef with Cred? No, not to my knowledge anyway. I consider him a friend. To be honest, the only good argument for a bear market, or the only upside from a bear market, would be the fact that I would be back active making videos for the Crypto Cred YouTube channel, like educational stuff. And I would have time to work on the futures guide. I would have time to redo some of my 2018 videos, some more articles, etc., etc. So again, the only possible upside to a bear market would be content. And that's how it usually works, right? So when the market is... When the market's like really bullish, I get super washed up, not relevant, whatever. No one cares to learn how to trade when that kind of stuff is going on. And even if I'm making calls, rotations, whatever, I'm not really good at promoting them, so to speak. So, and I'm not a huge shitcoiner either. So it doesn't matter, right? Washed up. And then when the market nukes or starts to range, whatever, suddenly I tend to see an uptick in terms of engagement, followers, people asking about videos, content, etc., because they realize that they trade, they didn't actually know how to trade this, and as soon as it went down or sideways, they get wrecked, and someone points to their favorite influencer points me very kindly towards some of my content. So that's always pretty... I've got my own proprietary indicators as to where we are in the market based on how much people give a shit about the content I make and have made, which is pretty funny. Yeah, cause I liked that video. That was good for sure. So yeah, that's Bitcoin and spot coin and all that kind of stuff. I hope that was somewhat helpful. If not, leave me a comment. I'll try to deal with it. In terms of ETH, as you can see, we have really strong support at 1K. But realistically, I'm expecting a deviation back below it, and then a sweep of 60. No, I'm joking. That's not real. As before, we will do what all good men do and simply ignore the monthly time frame. It doesn't exist. It's not relevant. So we're going to click away from it. We kind of have to do the same for the weekly, because weekly support doesn't exist either. So let's go back. There we go. Now we're okay now. Breathe. No, realistically, so when it comes to the weekly time frame, this is going to sound really bad, but if you want support, or like when you're looking for support structures, there has to usually be some sort of red candle in the vicinity of the area that you're looking for, right? So if someone just came to me and showed me this chart and said, where is weekly time frame support? My answer would be more or less the breakout range high, whatever level, close to 2K. Now, does that mean price is going from here to 2K? No. Does that mean this is the only level that's worth paying attention to? No. But just purely in terms of looking at the chart and looking at weekly structure, that's where it is. And a good example is Bitcoin, actually, right? Because you have to realize when Bitcoin mooned here, after its all-time high break, the question was, you know, this is the all-time high break, and you had all of this price action, and there were trades available within these weeks. There was no requirement to pull back to the all-time high level to go higher. You just had to deal with less pronounced levels on lower time frames. So that's just a quick, you know, consideration to bear in mind. Yes, it's worth having some sort of understanding in terms of, look, where is high time frame structure? Am I just dealing with air or shitty levels in between? But realistically, just because high time frame support is far away, A, doesn't mean price has to go there, and B, doesn't mean that new structures can't be formed closer to price. And again, Bitcoin is a really good example of that, because we broke the all-time high, formed this cluster, and then broke out of that. So now that the market's pulling back, we don't have to look for 20k to support, because we have weekly structure here, as well as the range, etc., etc. So the market forms new levels. No joke, I got a DM from a guy this week, like on this candlestick, saying, hey Cred, I shorted the 20k breakout because price didn't pull back and retest it as support. I'm currently underwater. What do you think I should do? So, you know, I know it's a hyperbolic and an extreme example, but that shows to some extent how the market's under no requirement necessarily to come back to levels where you would feel comfortable. Okay. So Ethereum, we're going to talk about Ethereum structure. ETH structure. So again, like we said for Bitcoin, if it gets to 38, 32, below that, it dies. So if it gets there, you want to buy it. On a weekly time frame, I'm reasonably comfortable making a similar type of assertion for ETH. If for any godforsaken reason, it wants to come back and retest whatever, 2k or the breakout level, I mean, the market will probably be in quite a state at that point. But if by some absurd version of the universe or whatever, by circumstances which aren't foreseeable to us at the moment, if the market ends up here, you can bet no matter what the apocalyptic vibe may be, I'll be looking for some sort of bounce, play, spot allocation, whatever. Because if I look at a time frame and it's the only structure on that time frame and it comes into that structure, I'm going to be trading it. It's just how it is, right? Now, the time frame which gives us actual information is on the daily, right? That's where we've got our most useful information. So, two structures, I think, well, three structures matter. So where is support turn resistance? Where is support right now? And then where are the nuke levels? So in terms of support turned resistance, I'm actually quite fond of this base that we had at 3,700, 3,800, thereabouts. And I'm particularly mad because I remember missing a limit order on the top half of this wick because I left it in too late. I missed the original entry and then it went without me. Fine, whatever, doesn't really matter. So in terms of if we get some sort of mean reversion, or where is daily time frame resistance now that we've had the breakout, just in terms of levels that I'd be willing to trade or pay attention to, for me it's 37, 3,800, thereabouts. Now, whether you want to make the case that a reclaim of that is a mega moon, or if you get a bit of a bounce, it's your area for mean reversion, whatever, I just think this makes sense in terms of what's above us, right? Now, where is support right now? I really think we've got a do or die type of structure, the same one we've discussed on live stream before, which is this cluster consolidation thingy whose upper boundary is at 3,400 and whose lower boundary is at 3,200. If this cluster structure, whatever type of thing fails, then we unfortunately have to face the reality of coming back to the pre-breakout base closer to 2,500, 2,400 or thereabouts, right? So realistically, as I said, we're left with more or less 3 areas, 3 structures, which are relevant to us now. High time frame support is comprised of 2 levels, top of the range at 3,400, bottom of the range at 3,200. In terms of playing any mean reversion, bounces, or where is resistance, or if you catch like a super entry, where I think is a reasonable area to de-risk, or just where is the FTA, the first trouble area, for me, it's at 3,800 or thereabouts. And then, as before, if the whole thing is fucked, total mayhem, rug pull, etc., where do we pray for, right? 2,500 or thereabouts. Now, within this range, it's pretty much the same price action based rules of engagement, principles, whatever, as we had on the Bitcoin chart, right? Which is to suggest we're essentially dealing with 2 ranges. This range is above us, is resistance, and again, it's only the top, not the whole box, right? It's the top. Shout out Trader Main. Trader Main is just like, yeah, we've got support here, just, you know, average in. No, I'm joking. I love you, Trader Main. Anyway, when a lot of the time when we draw these boxes, it's really the upper boundary and the lower boundaries that matter, which is why I've got them as specific levels. And the same applies to the range we are currently in. So it's the same thing. I'm playing this level to level. I'm not panicking, any of that type of stuff. I think, as we saw, we're within daily support, and the daily candle closes so far have suggested that it's holding, right, for the time being. So what would the bullish case be? It would be the upper boundary of this support range acting as support, and we know that trades taken from that, the first trouble area or first level resistance is around 3,700. You can see that on the daily time frame, the structure lands at 37, and there's a bit of intraday structure just under that level as well. Now, in terms of Bitcoin or ETH BTC, etc., there is some. I mean, CryptoPathic posted some really interesting stuff about ETH BTC. I would strongly suggest reading that or checking it out. For me personally, Bitcoin weekly structure is a lot clearer than this Ethereum daily structure. But if the market wants to prove otherwise, and if ETH BTC is bid, etc., I'm happy to change my mind. And realistically, whatever, if I'm going to get to play a bounce setup this week, and none have triggered yet, but if I do, actually, I mean, realistically, this might potentially trigger, just kind of eyeballing it now. I'm not sure, I'll need to look at it properly. But either way, there's no guarantee that both, or even any of them, or either of them rather, would trigger at all. So for example, even if I think Bitcoin's going to, like ETH is going to bounce harder than Bitcoin, and then ETH doesn't set up, Bitcoin does set up, I'll take the setup that's in front of me, right? I don't need to make any strong decisions now when it comes to making that determination. But more importantly, the extreme of support, 32, the bit of support which isn't doing its job at the moment, or this kind of your day trading range, 34 to 32, and then if there are any sizable or at least more obvious rotations to be played from a level to level basis, I think the clearer trades will either come in the form of some sort of trap at the extreme or some sort of reclaim of the upper boundary. If it's the case that you get bullish price action or a trap at the extreme, your first trouble area is from range low to range high, right? And then if the other setup is you get some sort of, again, break in market structure, say, and then a pullback to the upper boundary, then you're playing it from the range high reclaim into the daily, first trouble area. And that's the thing, right? I'm still, you can see from Bitcoin, from Ethereum, I'm still more or less employing a level-to-level framework. Because there's no fucking need to panic, right? It's probably too late to panic. So you tell your friends you're a trader, then trade the damn thing, right? You've got support, you've got resistance, you've got broken levels, you've got levels which haven't been broken yet, and the market's trying, etc. There's always this invisible kind of pressure that when the market makes a big move, that you absolutely need to catch the bottom. Like, oh my god, this is the fucking Rocky Balboa training montage. This is the day I've been waiting for. I need to just catch the bottom on low leverage and hold it for 10 years. No, you fucking don't. Just trade the market. Trade what's in front of you. Pay attention to the high time frames, sure. But there's no need to abandon everything and start coming to these momentous decisions like now or never. I've only got one trade in my gun or whatever. None of that is true. Just trade the damn thing. At least that's my plan, you know? And yeah, obviously I've talked about the bullish scenarios, bullish cases, whatever. As I've said, where have you come from? That was weird. If this fails to act as support and or act as resistance, especially on a daily time frame, it's fucked. So I'd rather that didn't happen. But structurally, as I said, pretty clear. First trouble area, resistance. Support made up of range low, range high. Nuke and prey level 2500. Until the picture clears up, or if I get something super spicy, I'm going to trade it level to level and see what's up. And that's also the thing, right? When the market looks like this, a lot of the time volatility is really good and low time frame conditions. I mean, it hasn't. This morning was the exception, but generally speaking, the volatility is good and the low time frame conditions are really good for short term trading. So it's almost antithetical in light of those facts to then take the whole approach like, okay, I need to just get one trade and then hold that long forever. And I want to buy the bottom and hold it on low leverage forever. That's like a fiction. And if anything, by focusing or tunnel visioning on that romanticized version of catching the bottom and doing nothing else for the rest of your life, you actually miss out on really, really good trade opportunities on shorter time frame or shorter term rotations. So I don't think it's the time to get lazy, complacent, or, you know, super emotional about the whole thing. Like, there are good trades to be made, you know? Good trades at good levels. But does that make sense for ETH? Okay, cool. I don't really have... I didn't look into altcoins like a whole lot. I probably should have. There are definitely some reversion plays to be made based on these levels. I was actually really looking to play the first bounce from 3200, but it happened at like 4 or 5 a.m. my time, and I tapped out and went to bed just before I got a chance. Because I don't like leaving limit orders overnight if I'm trading with leverage or futures. So I just tapped out before this move played out, which kind of sucks, but it is what it is. On the altcoin side of things, well, first of all, ETH BTC, kind of similar structure to, and I don't know, look, TA isn't going to be perfect on this, but in terms of what we've got available, there's a similar structure with the daily cluster here. I personally think this is likely to hold and take price into this high time frame range high. I generally get very, very suspicious when price comes really close into a high time frame level and then just stops. It tends to be bait, or at least the probability of continuation lower tends to be lower. Like if you get really close and then pull back slightly, I'm still usually going to bet on you hitting the level rather than topping out ahead of it, generally speaking. So it wouldn't surprise me altogether to see ETH BTC continuation towards 83, 84, which we also know is the weekly highest close, range high, whatever. So that's kind of on my radar. But again, I'll be looking, my kind of goal for the week is shorter term trading with Bitcoin and ETH, and also perhaps spot allocation as long as those daily conditions are met. So I don't really, this doesn't matter the whole world to me for the time being. Now, in terms of large caps, I've sort of updated my watch list. I mean, altcoins generally. Some of them have really clear structures, right? So, for example, BNB. It has a weekly cluster up here at wherever this is, 500. Right? The breakout level, the cluster, whatever. Now, if that doesn't hold, it's going to take a shit all the way back to 300. And that's a pretty big haircut between these two levels. But that's good because it means you know that if you're doing business and buying BNB here, you're, at least structurally, your risk reward is pretty good Because if you're buying this cluster, you're targeting all-time high, and then if you're invalidated, you don't start buying dips here. You just let it fucking go all the way down until it's old breakout level, and that's where you take the next bet. And it may seem counterintuitive, but these sorts of structures are often the best to trade. When you have a really good level here, just like a really good level, and then you've got absolutely nothing until the next level. Because what that means is this: you get like a really skewed, high conviction, do or die type of trade here, and you know that if it fails, then you don't buy the dip again. It's like either this holds and I'm going to bet on it, and if it doesn't, it's fucked, and I can either short it down to the next level or just forget it exists until it reaches the next structure. Like when there's space between levels, trading them as a TA guy is really fucking good, because what you don't want is when you get like a good level here, then there's another good level, then there's one a bit below, and then let's say the market's nuking. The question is, well, which one do I buy? What do I do? I mean, my answer is usually, if your charts look like this, then your level selection probably sucks, as rough as that sounds. But sometimes it's genuinely true that you have like pretty good areas, more or less stacked on top of each other. And that makes it trickier to trade, in terms of making a selection as to where you want to do business. But you have like really good level and then nothing and another really good level. The decisions you have to make in terms of what structure to trade are at least clear, right? It's either this or it takes a fucking nuke to zero, which is a great framework to have in terms of where to place your bets. So for BNB, weekly support comprised of two structures. You can see lowest close on the daily, weekly range low, 482. And then the upper side of that, highest close at 520s. Again, how exactly it wants to play out, what it wants to do, doesn't really concern me too much. I'd definitely be a fan of something risk-defined. Hi, Izzy. How's it going, man? So, for example, as we saw with Bitcoin towards the upside, I just don't, especially here because it missed slightly. I'm not a huge fan of that. I'd generally be a fan of an attempt to break from balance, right? Or to break down below this extreme. And then if that effort fails, just like we discussed for Bitcoin, if one side really tries to do something and they aren't successful, they usually get squeezed to the other side. So that's sort of a very textbook, if you will, or basic setup at support. And if you're playing more of a reclaim type of game, I still think you've got pretty decent structure close to 600. Why? Resistance, looked like a flip, which failed, trades lower. I mean, this is just a really good level. That's all it is. And as we've discussed, if you get a failed breakout deviation, failed break from balance, whatever, once, the chances that you get it twice are pretty low, right? So you've got resistance, market comes above, does this, and then breaks back below, finds resistance. If it comes up and reclaims the level again, the chances of a second failed breakout, deviation, whatever, are pretty low. Normally, once it gets accepted back above the original level, it's good to go. It's good to go. It's one of the better continuation setups that I trade. And I'll be honest, a lot of the time, if your charts look like this, where you have a level, and then it just looks like, resistance, breaks above, breaks below, breaks above, like there's a good chance that either, one, your time frames are fucked up, so you've got like a daily or weekly level, and you're obsessively looking at like 5-minute candle closes to try to get a trigger. That's one symptom if your level's getting chopped up, but realistically, 9 times out of 10 when I get DM'd, stuff like that, if you're just seeing your levels get chopped multiple times, not respected, whatever, it's either time frames or your level selection sucks, which is unfortunately true. And if your level selection sucks, I mean, start with the higher time frames, and that'll fix most of your problems. But yeah, just a quick note there. So for BNB, it's generally a good bull market coin, but where does it make sense from a trading perspective? Reclaim, accept through 600. At that point, the all-time high, I think, is vulnerable, or at least that's your first trouble area. Or make an effort to nuke below the extreme, 480. And then if that gets reclaimed to any extent, especially with this wick being left in, effort to break this, which isn't successful, I think there's certainly some day trade opportunities from support to resistance, but maybe something beyond that as well. So that's on the BNB side of things. Dogecoin doesn't even know what a correction is, right? Pretty staggering, but also not quite getting as much you know, if Elon's the hype man for Dogecoin and then his crypto topic of choice becomes Bitcoin, becomes less exciting. But purely in terms of structure, daily cluster, try to nuke it, right? That's actually a pretty good example, to be honest, of some of the stuff we've talked about. You've got daily support, right? Lowest close, bounce. Market tries to nuke, break the support, and then gets immediately engulfed. Normally, once that same level, this ends up being the breakdown attempt. Once it fails, that same level is established as support. The Dogecoin range is reasonably straightforward. You've got daily support, 45 to 49, and then you've got daily resistance at 58k. And then if that, again, the probability of a failed breakdown getting reclaimed again is pretty low. So if 45 goes, chances are it's kind of done with this range. And the next one for me starts, or its upper boundary is all the way down at 32 cents. So this ends up being your day tradery type of range. If you're a fan of buying strength or getting on board bullish continuation, which the BNB scenario we discussed, getting back above the breakout level, for the Dogecoiners, it'd be a simple case of support, turn resistance, any strength through there. I think the highs are vulnerable. Generally speaking, this is the range. It's ranging until it isn't. I'm not too fond of it at the moment, but whatever. The levels are the levels, right? And that's all she wrote when it comes to Dogecoin. FTT, I kind of just keep on my watch list because those of you who know how I tend to collateralize FTT BTC, if you look at this chart, it's literally up only against Bitcoin. So if I'm bullish Bitcoin, I normally express that view by rotating into FTT from a collateral point of view. And I trade on FTX as well, so it just makes sense, right? So I don't kind of short-term trade this or do anything like that. It's more the case that if I think Bitcoin's going to moon, specifically like higher time frame, go back to trending or a break in market structure or whatever, and I want to have crypto collateral, which is BTC oriented, I'll actually mostly do it via FTT. So that's why it's there. Litecoin. Yeah, so the shitty thing about Litecoin is, well, it could be shitty, but it's also potentially a good long if it fixes itself. You have a macro breakout, right? Big swing point, breaks above it, and now that's failed, right? And in doing so has created a bit of a cluster, supply zone, doesn't really matter, whatever you want to call it, at 320s or thereabouts. Now, generally speaking, in a bull market, right, when the market makes a breakout and then comes back to retest, you want that level to hold for your easiest and most aggressive continuation, whatever. Now, as we discussed in the market structure video, if price makes a higher high, the options when it comes to where is it going to make a higher low, yeah, option 1 is, of course, the flip of the old high. But then option 2 is some sort of lower high on a pullback. You get your kind of OTE measuring stick fib type of bullshit. As long as the structure remains intact, low, high, higher low, higher highs, as long as it forms a higher low, even if that takes price temporarily below the breakout level, that's also fine, right? So realistically for Litecoin, I mean, there is weekly structure here. I've got support just at this highest close or breakout point at 270s, which is fine, and that's currently where we're getting the bounce. It actually looks reasonably decent. But if you're into your higher time frame stuff, I think the more obvious trade would be a reclaim or strength back above the breakout level, and then you've got a really clear target in terms of a cluster at 345 to 350s, and that's plenty space to be trading the altcoins. Right now it's a bit less attractive, simply because I know the low time frames look fine and it is coming off of support, but there's, for me, this becomes resistance or the first trouble area here, and it just seems a bit late for the support play given most of the reactions already kicked in, right? So if it wants to reclaim and give me continuation towards the origin of the breakdown, I think that's cool. If it wants to turbo nuke towards the weekly range low, I think that's puntable as well. But within this range right now, if you want to day trade it, go for it. But the setups are slightly less appealing for the time being. I don't think I've missed anything there. Sol, this coin loves to go up when the market is weak, and I'm not very good at trading. Like, I'm fine with trading outliers, but not really at the extremes, like when the whole market looks like shit and something moons. Unless it's already in my portfolio, the chances are that I'm just gonna fuck it up and not trade it properly. So I don't really have much to say here. The only recent revelation, not revelation, revelation sounding like some kind of prophet. I wanted to buy Sol on the dip. Specifically, I had a limit order to buy the cluster bottom here. I didn't get it, and now it's kind of reached its first trouble area resistance, whatever. So there's really not much there for me. If the market wants to catch up in the bearish sense to everything else and turbo nuke back into support, I'd probably punt 38, or at least below this low. There's probably some sort of reversion play to be had into broken support turn resistance. But with where it is right now, and they had like some sort of announcement which didn't go well, whatever. Not terribly interested. DeFi stuff, again, quite immune to a lot of this. Aave is holding up well. Weekly structure kind of flipped at 470s. That's fine, right? Not everything. Comp, just not a good looking chart, to be honest. This kind of reminds me of the Bitcoin cluster. Here. Upper boundary, 550s. Lower boundary, 400s. If it wants to come back and trade within here, be my guest. Slightly less clear to me now that 800 has been lost. Curve, similar type of thing. It held up pretty well, but these aren't levels that I'm willing to bet on, and it's just kind of stuck at resistance. If it wants to nuke towards the bottom of the range on the weekly time frame and do that same thing, either give a quick fill at the level and then reverse into some sort of resistance, that's a short-term trade I'd be fine taking, or for higher conviction or something worth holding, same thing as before, a real effort to break higher time frame market structure, which then isn't successful. At that point, your risk is defined for you, and you play it towards the top of the range and potentially beyond. Link, not as clear. Matic is just teleporting and it's far away from everything. The first support that I'd be willing to play on a bounce is actually all the way back at 97 cents, which is in itself ridiculously like a 50% pullback. So it's unlikely that I have anything useful to say for Matic for the time being. Uni, I don't know where these levels come from, but looks fine, to be honest. No matter how you dice it, it's like a topside retest of the breakout. As long as it doesn't deviate that or fall back within, looks all right. And then YFI narrowly missed the weekly breakout level, so not much there for me. As for other stuff on my watch list, and again, for those of you who don't know, I always start the day with my overview. I've got Bitcoin, ETH, BTC. I've got indices to see how altcoins are doing. And as you can see, really helpful because it can tell me if I want to be playing altcoin bounces, where do I look? And if you look at DeFi perp, you can change by percent. Boom. I know the DeFi perp is up, actually Holy as well. But in terms of where I've got rich choices, so to speak, and this is just Sam coins and Holy perp, right? And Seco as well. But in terms of altcoins, DeFi perp out of the big indices is the strongest. And then if I look at DeFi against Bitcoin and DeFi against ETH, I can at a glance with my overview see that it's outperforming or performing positively. So then I can open my either DeFi blue chips list or the DeFi coins in my active list and decide what I want to trade on a shorter term basis if appropriate. So having that kind of setup is really helpful. I've got the indices, right? Let me just change this back to whatever it was. No, let's do this. Yeah, I've got my indices, so I can see in a nutshell where the market's at, what's moving, what's dying, what's showing relative strength. Smart contracts, see if anything is standing out. Surprise, surprise. When smart contracts nuke, Solana go up. And then some traditional finance stuff to see how the legacy cucks are making our life difficult. Usual stuff, ARK, the shitcoin ETF, Coin, S&P, Euro USD to get a sense of dollar strength, GME, because meme stock MicroStrategy to see how Saylor is using his amazing podcast studio to increase shareholder value. I don't know why this is here. Tesla, because we all know Elon, and then gold to see how Peter Schiff is feeling and what he's having for dinner. So once I have this kind of overview, quick glance, see how the majors are doing, who or what is leading in smart contracts, where is the rotation in terms of altcoins, and then I'll go towards those subcategories, see what looks good, doesn't look good, has clear levels, and then add them to my active watch list. I don't know if that's helpful, but that's at least how I do things, and it saved me a lot of time. And on the shitcoin side of things, AFX, I don't know what this does, but a lot of people who are much more intelligent than I am with this stuff seem to be bullish. So I'm looking for some sort of entry. I just haven't got it yet, and you can see weekly resistance is resisting. So either weekly strength, or even, to be honest, daily strength through 40, that will probably send, or the already deviated range low support at 24 is probably a punt. And again, this is one of those positive cases where you've got a lot of space between levels, whereby, you know, I can say if 24 doesn't hold, it's worth betting on, because if that fails, it goes all the way back to 13. So there's no ambiguity, like, okay, 24 failed, but there's a level at 22, hey, 19. No, none of that shit, right? It's either 24 or it's 13, which is how I like to trade structure a lot of the time. And then other shit coins on my watch list, Rune. By the way, I call these shit coins. It doesn't necessarily reflect my fundamental views, whatever. I just don't know where to put them in these categories. Rune still looks fine, as long as it doesn't fall back below its breakout level at 16.6. It looks, I mean, relatively strong, obviously. And then Sheeb to see what the retail BSC legends are feeling. And Sheeb is at support, oddly enough. So there's that. There is that. That's kind of it. That's all I've got. Any questions? Was that helpful? Did any of that make sense? Are you slightly less panicked? Have you liked the video? And again, I appreciate everyone hanging out on this Monday afternoon, evening, whatever it is. Hopefully some useful context for the week ahead. Sorry, Sheeb is the RC20. According to Brendan. Yeah. My bad. No music. I've just stopped. Stopped doing it. What was that channel I mentioned? Trader SZ. I think his Twitter is Trader1SZ. Let me check. Yeah, Trader1SZ. There you go. If you want ranges, market structure, deviations, all of that fun stuff, which made no sense to me when I started, but once you've watched a few hundred hours of Forex scalping in 2018, you learn a thing or two about a thing or two. How are your yats doing? Yeah, amazing. I'm really proud of my yats. Delighted, to be honest. I'll rest when I'm dead. Ain't that the truth? Portnoy pumping Safe Moon. Is that the token he's sworn his allegiance to? Not surprising. Bit of a grifter. No, I'm joking. He's incredibly entertaining, Mr. Portnoy. Slightly weak hands when it comes to Bitcoin, but definitely entertaining. And also, I think he raised a bunch of money for restaurants in New York and the surrounding area during the pandemic, so that's awesome. Cred, why is your English so complicated? We are missing the essence. Is it really? Come on. What have I said? I don't think I've used any, when it comes to describing the TA stuff, I don't think I've used, I mean, you can tell me what confused you. I'll try to clarify. How often do you watch Trader Sam? Pretty much every day. Okay, cool. As before, go to trletter.com. The newsletter will come out in like 24 hours. It's free. We send you 1 email per week, also sponsored by Blockfolio, and it trades better than Don and I. It's kind of our brainchild that just trades very conservatively, high time frame levels and market structure, and as a result, it's just solid, you know? It's solid. So go check that out. Like the video, subscribe, all of that fun stuff. I hope this has been helpful. Thank you again to Blockfolio. Spot trading, portfolio tracking, where you can hide the percentages and see how much you're not down. So that's really helpful. Thanks to them for sponsoring Technical Roundup. That's all I've got. See you on Twitter, the newsletter, all that fun stuff. Have a safe trading week. Let's not fuck this up, gentlemen. Keep a trading journal this week as well. The future you will thank you for it. Take care, and I'll see you next time. Bye-bye.